Good morning, guys. JGFA23. I'm just going to make a quick recap video of AREB Friday's trades from it. So basically, you guys, all right. AREB in the morning was gapping up. It's a penny stock, and it's a Friday, right? I don't usually long that many small caps, honestly, because I feel like it's just like shoveling shit against the tide. Yeah, every once in a while one squeezes, but most of the time they just gap up and sell off or have a little pop and sell off. I'd much rather long large caps and short small caps. But this stock, it was a Friday. Guys, it has the gap stats only close below the open 60% of the time. Plus, if you look at the daily chart, all right, it had very high volume in the pre-market, 17 million, which actually isn't really crazy anymore since we get that a lot. But main things to look at, all right? Number one, this stock is known for spiking, right? It spikes. It likes to spike a lot. Now look at this. Look at this level right here. Clear breakout level. 45 cents, all right? So usually when stocks break out at levels like that, they'll just dip, retest that level, especially if they have a history of spiking, and go to the next level. So if you look, after this breakout level, where's the next level? This is the next old support that broke. All right, so we have pretty good room. That's a 100% move from 45 up to 90-cent pivot here. All right, there's no really good pivots before that. So what's going on here at the open? All right, well, first, here's my chart, you guys, from the trade. As you can see, the 45-cent level was the key level. Now, not only that, it's not like I'm just buying there, all right? So I know the 45 cent is the key level. I have it drawn on my chart. The stock has dropped a lot. Look at this. This thing had dropped 40% off the pre-market high by the time it gets there. Now, what am I doing? I'm just waiting. I see first, this is the first clue, all right? It tries to break that level, it reclaims. You could go long right there with a friggin' 2-penny stop. But I like to wait for a little more confirmation. Boom! We get this bullish engulfing candle. Now I'm always thinking risk reward. Best thing I want to do now is get in on the first pullback so I can risk off this low. It comes down, we make a bottom tail, I go long right there. As you can see, as soon as we made that bottom tail, this is a 5-minute chart, but as you can see, my entry is right here, 49 cents. As soon as I saw this pullback, boom, push back up, 49 cents. Now, some people may say you could go long above this level, whatever. I like risk reward. I'm always trying to get the best risk reward once I believe the confirmation is there, the stock is going to start to go. Right? As soon as we saw this bullish engulfing candle and this under over, I wanted to get in on the pullback. And then basically after that, I'm just scaling out into this key level, the next key level, which was already like an 80% move. Almost, from the 45 level, it was about a 100% move. But I got in around right here, scaled out into this level. Now, at that point, as you guys can see, I'm done with this trade until the afternoon. I do not trade this crap right here. This midday crap, I don't trade it from 10:30, 11 to 1:30. I just want nothing to do with it. Okay? So now, where is the next trade for me? A lot of times I don't even come back and trade in the afternoon. But guys, remember, I'm always thinking about risk reward. So once I believe the top is set, if you stayed at your desk, you could have shorted lower high right here, had great risk reward. But now, right here is still middle of the day. End of day over here, I'm not even taking this trade unless it gets close enough back to this high, or I feel like I have enough reward to the downside, okay? So if the support now is at 67 cents, right? Do I want to take the trade at 80 cents and risk 13 cents to get back to 67 cents? No. I want to take the trade up here into this zone because where I got short around 86, 88, I'm only risking like 5 cents. Now, guess what? 83, 77, 72. This is already a 4-hour trade back to the support level. So that's all I care about. I'm not going to trade it right here back to this level because I have to risk too much. I'm not going to trade it right here. It target this level because the risk reward sucks. Over here, it popped up real close, high enough to give me a good risk reward trade, even if it only goes back to support, which we kind of ran out of time near the end of the day, and I ended up covering it right around 67 cents. But you can see that it just was still good risk reward off the highs, right? So remember that. You always want to be using the daily chart or looking to the left, seeing where do I have to risk off of and where is the next support. Can I get good risk reward off that? And then if it happens to come and break lower than that support, even better. You get even more odds than you hoped for. You're in the driver's seat. You know, you had a great entry, good risk reward wise, and you're in the driver's seat. But basically, you know, it comes down to the breakout retest level and having history of spiking, right? And having clear levels above to take as your target, right? And that was pretty much it. It wasn't like rocket science. It's just waiting for the levels, knowing that it doesn't have any room to go down here. It has a very, very, very key breakout level. And then just using those levels for entries and targets off your triggers. Whatever you use for triggers to get in. I like to use fake breakdowns and, you know, and under over and then bullish engulfing candles and pullbacks. This right here, this quick pullback on a 1 minute chart, risking off here, is the same way I look at the short up here. This is the top is set. Now I'm looking for a pullback close to this level to enter. And that's pretty much it. And they did have a distribution agreement news, which was like, yeah, you know, I don't really care about the news unless it's like really good. Mostly just trade the chart. Unless I'm looking to short it and I think the news is super good and it has very high volume, it's going to be a headache. But I still mostly care about the gap stats and the chart. And also, you know, if the stock has a lot of dilution, I will think twice about longing it or holding my long for more than a few minutes, you know. Because even if it has dilution, it still might squeeze a bit before it starts dumping back down. Yeah, that was pretty much it. Not rocket science. Just having a setup with a key level to risk off of, an entry trigger, and good risk reward trade. Yeah, that's pretty much it. Have a good weekend, guys.